Hey folks, Harry Swaminathan again. Looking at Amazon for today, and the way I'm looking at Amazon is two different trades, and of course we'll choose only one. The let's go take a look at the options first. It's currently at 298. So now the expected move today is about 18 bucks as of today. For next week, the expected move is about 20, but that, you have 8 days for that. So 18 bucks is the expected move. And so a credit trade makes sense at this point because there is quite a bit of premium. So if we looked at, let's say first we're looking at the July, which is expiring tomorrow. So we don't really have a whole lot of time. So in fact, let me turn the other one off. For tomorrow's trade at similar strike prices. So we've got 330 and 265. So we've gone about 33 points on either side. The expected move is 18. We are going 33. So almost double that. So we're looking at definitely over two standard deviations, maybe even 2.5 standard deviations. So it's got a pretty high probability of success. So a short strangle makes sense. Now, we've had a very good run in the earnings season, so I want to be a little careful with Amazon and not sort of blow it up in in this trade. But it seems safe, right? I mean, it's 18 points and we've got 33 points on each side. So it seems safe. But I'm a little leery of this tomorrow's option just because there's not going to be a whole lot of time to adjust it. Whereas if we went to the next week's expiry, which is August, and so we'll have 8 days there, and if we sold a similar spread, then we would pick up 2.58. So you can see it's a whole $1.10 higher. So my sense is we could even be a little safer and say, let's give it a little bit more room and do 335 to 60 and pick up $1.81. So, that will give us a credit of 1,800 on a margin of 33,000. So it's about 5%, a little more than that, perhaps 6% return. But this is in 8 days. Now, I think me personally, I would prefer this trade, or if you want to get a little bit more premium, you can we can still go to we can still keep it at the 360 and 265 level because we have some time and we can pick up a nice additional premium as well. So my preference is for this trade, although this also looks fairly safe, but I'm just concerned because it's got only 1 day and we'll have to, in case Amazon makes a huge move, at least in this option we have some time to deal with it. Whereas here we wouldn't have that. So my preference is that we go into next week, the August one, and pick up the 2.59. Now let's study the volatility crush because obviously we are going to get a huge vol crush in the expiry for tomorrow, but this is not too shabby itself. This is about 56%. And as you can see, the average is between 39 and 44. So there'll be about a 10-point crush, 10 or 11 points. And so that itself can give us about $2,000 just from the Vega effect itself. So I prefer this. And even though it's next week, you can see theta decay is also 545. So that's not bad. So I think I'm going to go for the August trade, which have 8 days to expiry, and pick up a credit of 2.58. I'm going to put 20 contracts, but obviously please watch your size and make sure you're okay with the risk with the risk you're putting on. So the short strangle for Amazon in next week's expiry, I'm going to put this on, but let me first create this video and send it out first. Thank you.